All right, two things we have to talk about today, which is what happened with the inflation data, and afterwards what the Federal Reserve might be doing. So, of course, yesterday was Thursday when basically the CPI drop, showing us a year-over-year data of 8.1%. And that was pretty tragic because the market tanked about 3%. However, the rally actually came in post market open, which actually pushed the Nasdaq and the S&P upwards of 2%. There was almost there's almost a 5% movement yesterday in the indexes, and it was actually pretty crazy. And personally, I think that was all from buying pressure. Personally, I think I did a few pretty good moves on my own for me to actually earn a little bit of premium right before CPI, and I bought in right after CPI came in. So I think those actually came out pretty well. I earned a little good money from that. And of course, at the same time, I also started to buy in on the dip. Okay, I bought more shares in Palantir, more shares in SoFi, more shares in Snapchat, more shares in Apple, and more shares in Google. Okay, those are the 5 companies I bought yesterday. I would say I bought pretty heavily. I bought about like $4,000 worth of stocks, just so that I can actually just puff up my portfolio a little bit more. And of course, buying on the dip because I need to lower my cost basis a little bit more as well. Okay, so of course, that apparently was a great idea because the rally came in. The rally came in so hard that when the market closed, the S&P 500 was actually up almost 3% at about 2.6% yesterday. However, at that time when I actually saw that the S&P 500 actually went up to about 2.4% at that point, 2.4, 2.5%, I started to sell calls again. Okay, and I'll kind of explain why, because the 2 different reasons that I wanted to do it. Of course, again, this is not financial advice. Do your own due diligence. This is not financial advice. Okay, I just want to make this clear. Okay, I'm only doing this for a very, very short term, simply because I do see Friday as a very particular day where there's a lot of selling pressure more than buying pressure most of the time. Okay, that's going to be the first reason. And also another reason is because I feel that what happened yesterday with the rally that brought forth after the CPI data was actually not that good of a news. It simply means that people like myself are covering their shorts. We are just buying back in for all the shorts that we have done. And because of that, that's actually creating the buying pressure in the entire market throughout your S&P, your Nasdaq, and your Dow Jones. Pretty good. However, we cannot forget the fact that CPI, the entire inflation data that came out, was still pretty bad. Okay, there was no particularly good news about the entire CPI data. Okay, and of course, the day before, we actually got the Fed's minute as well, which is so why we have to also talk about the Feds. I think that the Feds currently is going to be possibly looking at 75. Well, 75 is almost a certain thing, but we're looking at maybe even 100 basis point increment. And now we have to talk about the possibility of the Feds actually being too hawkish. And now I'm going to tell you why we have to talk about the possibility of the Feds being actually too hawkish. Because we already have 3 75 basis point increment in quick succession. And let's just say we had another 75 for even 100 basis point increment. Okay, I think the next SEP that's going to be coming out is most likely going to be in November. Okay, that SEP is going to be the most important one because that will be the last SEP of the year, and we have to see what the Fed's outlook would be in terms of the Federal's fund rate by the end of the year. I would assume that it might easily become 5% or even 6%, depending on how inflation is going to be moving in the next few months. So personally, I think that that's going to be something that we have to be very, very wary about. However, with all this quick succession of interest rates increment, what we have to also take into consideration is 6 months or 8 months or even 9 months later is when we actually start to see the interest rate start to take effect. The results of all those interest rate hikes or the consequences of those interest rate hikes. And there is a very, very high possibility that companies are all going to fail. However, of course, in the United States, big companies do have the history of getting bailed out by the Feds. Okay, when stuff happens, okay, the Feds are going to bail them out. And when the Feds bail them out, it's all good. When the Feds bail them out, they just feel that, I'm not worried. I can continue being as risky as I am, as I can, and as I would. because that way they can earn the most money. It's quite simple if you actually think about it. Imagine if you are going to the casino and you know for a fact that every single time you put out $100 bill on the roulette table, you are not gonna be in any risk. You're just gonna put up $100 bill every single time. Because why? If you lose it, I don't care. I just reach in my pocket, poof, yet another $100 bill, and I'm just gonna do it yet again. However, if the Federal Reserve do not bail them out this time, effectively, in my own version of this, that means that they're gonna put out $100 bill and they're gonna be wiped out clean, and they are gonna be saying, okay, you know what? I'm gonna go and earn some money right now. They're going to earn $50 now, and they're going to be like going back to the casino and thinking, okay, maybe we do not want to put $50 in. Maybe we should just put $20 in. This is when companies start to think that, oh, maybe we need to look at our risk appetite. Maybe we have to manage our risk a little bit. Maybe we cannot be as risky as before. And that's what I think the end goal for what the Federal Reserve is doing for companies should actually be. Federal Reserve should not be bailing out companies as and when they like. But with what the Federal Reserve is actually doing, by increasing all the interest rate to those abnormal levels, okay? But again, like I said before, I don't think that the Federal Reserve is doing something wrong. But the Federal Reserve do need to take a note that maybe in March, maybe in April of 2023, we might suddenly have this super tight monetary policy that's tying the entire country down, and hence bring the whole entire world economy downwards as well. So of course, a lot of people, a lot of analysts also are also talking about how the Feds might have to start to think about stopping or pausing rate hikes, or even lowering interest rates. But let's be honest here, if we're looking at the inflation data, we have not even seen any level of deflation happening in the past 12 months, or past 18 months, or past 20 months. We have not seen any deflation happening. So why would you think that a de-escalating of interest rate is going to be possible? It's not going to be possible. Okay. Of course, when we actually got the interest, we got the inflation report of 0% month over month, you can argue that maybe a rate pause could be possible. But like I said before, even if you get 0% till the end of the year over year, we're still going to be getting about 6% inflation, which is 3 times more than what we are usually going for. So ultimately, I think that, getting a lower interest rate hike, lowering interest rates or even pausing interest rate is not exactly going to be the best solution forward, which is why I do think that the Federal Reserve is in a very, very tough spot right now. But we have to see. I do think that the Federal Reserve at some point would need to stop bailing out companies. Hopefully that will be the case, and that way we can actually ensure that companies would go for a longer way, not being so risky. But anyway, that's all I have for this video. I just want to let you guys know about the whole entire inflation majiggy with what the Federal Reserve might be actually doing as well. But anyway, that's all I have for this video. If you guys enjoy this sort of content, please subscribe to my channel, because it really helps me out a lot, and I'm really trying to get to 100 subscribers by the end of the year. But yeah, anyway, that's all I have for this video. Thank you so much for watching. I'll see you guys in the next one.